All right, let's talk about crypto. More specifically, let's talk about why the prices seem to go all over the place. It can feel pretty chaotic, right? Well, today we're going to cut through all that noise. The goal is simple, to give you a solid framework for understanding why the market moves the way it does. So let's get right into it.
I mean, it's the question on everyone's mind, isn't it? You pull up a chart and it just looks like a total mess. Up, down, sideways, it feels completely random, like it's all just hype and speculation. But what if I told you that underneath all that chaos, there's actually a structure? What if there are real patterns and forces you can actually learn to read?
So here's how we're going to break it all down. First, we'll look at what makes the crypto market tick 24/7. Then we'll get into identifying trends, finding key price levels, and dealing with that famous volatility. After that, we'll zoom out to see the bigger cycles and drivers. And finally, we'll wrap it all up with a structured approach you can actually use.
Okay, first things first. We have to get a feel for the playground we're in. And let me tell you, the crypto market is nothing like the traditional stock market. You know, Wall Street opens at 9:30 a.m., rings a bell, and closes at 4 p.m. Crypto? Nope. This thing is a completely different animal.
And what's so wild is how all of these things are connected. Think about it. This market is always on, 24/7 all around the globe. That means some big news can drop in Asia and cause a massive price swing while folks in the US are fast asleep. It's this constant global accessibility that fuels the insane volatility and those lightning-fast trend changes that crypto is known for. It's all part of the same package.
All right, so in this crazy, always-on market, how in the world do you figure out which way is up? Well, you start with the most basic tool you have, identifying the trend. Seriously, just think of it like a compass. Before you do anything else, you need to know which direction the river is flowing. Probably the easiest one to spot is an uptrend. It's pretty intuitive, right? The price goes up, makes a new high, then it pulls back a little bit, but not all the way down. Then it pushes up to an even higher high. It really is like climbing a set of stairs. Step up, little pause, another step up. When you see this pattern, it's a clear signal that the buyers are in charge.
And you guessed it, the exact opposite is a downtrend. The price drops, makes a new low, it might bounce back up a little, but then it falls to an even lower low. This is that same staircase, but now we're walking down it. And this tells you that, for now, the sellers are the ones calling the shots.
Then there's the third option, the sideways trend. You'll hear people call this a range-bound market. Basically, the price is just bouncing back and forth between two levels, not really going up or down. It's like a tug-of-war, where neither the buyers nor the sellers can get the upper hand. The market's just stuck, trying to figure out its next big move.
Okay, cool. So we've got our compass, we know the general direction, but a compass isn't much good without a map, right? We need to know the terrain. And that's exactly what support and resistance levels are. They're like the mountains and valleys on our chart, the key barriers that price reacts to. The easiest way to think about it is like this. Support is the floor. It's a price level where in the past a bunch of buyers have jumped in and said, hey, this is a bargain, and their buying stops the price from falling anymore. On the flip side, resistance is the ceiling. It's that price where sellers tend to show up and say, all right, time to sell, and that selling pressure stops the price from going higher. The whole game often plays out between these two zones. So how do we actually see this battle between buyers and sellers at these levels? Well, that's where candlesticks come in. Every single candle on that chart is telling you a story. It's a story of who was winning the fight in that specific time period. Was it the buyers or the sellers? The shape, the size, the little wicks, they all give you clues. It's kind of like learning to read the language of the chart itself. All right, so we've got our compass for direction and our map of the terrain. Awesome. But if you're going on a journey, you also need to check the weather forecast, right? And in the world of crypto, the weather is volatility. It's all about how fast and how wildly prices can swing. 1 minute, it can be perfectly calm, and the next, you're in the middle of a full-blown hurricane. So, what causes these sudden storms? Well, it can be a whole bunch of things. Some big news drops, and suddenly the entire mood of the market flips. Or maybe a huge player, what they call a whale, decides to buy or sell a massive amount, and that alone creates huge waves. And since crypto markets sometimes don't have as much money flowing through them as, say, the stock market, these events can have a much, much bigger impact on the price. And this is the really important part to get. Volatility isn't just bad. It's a classic double-edged sword. Yeah, those huge price swings are what create the opportunity for huge profits. But they also create the exact same risk for huge losses. The trick isn't to be afraid of it, but you absolutely have to respect what it can do. Okay, enough about the daily weather. Let's zoom way out and look at the long-term climate. Because markets, and crypto markets in particular, never just move in a straight line. They move in these big, sweeping cycles. And these cycles are driven by two main things: raw human emotion and the actual, fundamental progress of the technology.
And this cycle pretty much follows a predictable story. It usually starts quietly in what's called the accumulation phase. Then it builds into a nice uptrend. Then, bam, you hit euphoria, where it feels like prices can only go up and everyone is jumping in. Of course, that's usually followed by a painful correction, which can turn into a long, grinding bear market. Finally, things bottom out, and the recovery begins, starting the whole process over again. Just knowing where you might be in this cycle can make a huge difference.
But it's not all just charts and emotions. What actually drives the long-term value? We're talking about real-world stuff. Are more people actually using the network? Are the developers shipping major tech upgrades that make it better? Is big money from institutions starting to get interested? Are governments making friendly rules? These are the fundamental things that build real, lasting value.
So, let's recap. We've got our compass for direction, our map with its key levels, a feel for the daily weather, and an understanding of the long-term climate. Now, for the most important part, let's put it all together into a simple, step-by-step plan you can use to make sense of it all.
Think of this as your personal pre-flight checklist every time you look at a chart. Step 1. What's the main trend? Are we going up, down, or sideways? Step 2. Where are the major floors and ceilings, your support and resistance? Step 3. What's the weather like right now? Is it calm or is it volatile? And finally, step 4. Use a couple of other tools, like trading volume, to double-check your analysis. Following these steps takes all that chaotic information and turns it into a solid foundation for making a smart decision.
And really, that's the whole point of this. When you have a structure like this, you stop making those gut reaction emotional decisions. The ones based on FOMO or panic. Instead, you start acting with confidence because your decisions are based on a clear view of what's actually happening in the market.
So, there you have it. You've got the basic toolkit, a compass to find the trend, a map to see the key levels, and a way to read the weather. Look, learning this stuff is a journey. It never really ends. But now, you have a solid starting point. You have a framework. So the only question left is, are you ready to start your journey?